and that move down towards the, a full moon move, right? Because the first, which is tomorrow, is officially the full moon in August. And so 0 to 3 days after that full moon, we can expect an execution of that move back down. So either tomorrow, Wednesday, Thursday, or Friday, we should expect a move back down, right? Which means it's very likely that before that we get a move up. And the way the charts are looking, it's looking very likely that this range that we've been in, right, for the past 5 days, I think. How long has it been? Since the 24th or the 30th? 5 or 6 days now, yeah? 5 or 6 days. Oh, no, 7 days. 7 days. It's been 7 days since we've been in this range. It looks like it's going to break up, okay? Go on the higher time frames. Go on the hourly time frame. You're completely oversold. Go on the 4-hourly time frame. Completely oversold. Daily time frame. Completely oversold. Momentum indicators telling us that it's more likely than not that we break up and not down, okay? So that's one part about it. Obviously, I'm not just looking at the Bitcoin chart. I'm also looking at the US dollar currency index, which we typically use as a major indicator on this channel. And as you can see here, this is almost the exact opposite of the Bitcoin chart, right? From the 27th until today, you have a range here, right? On the 15-minute time frame, you can see a very clear range on the USDXY. And this looks distributive, whereas Bitcoin looks like it's accumulative. It looks like it's an accumulation channel that's going to break up. This looks like the opposite, a distribution channel that looks like it's going to break down, okay? On the 15-minute time frame, you have overbought nature on the momentum indicator, okay? If you go to the hourly time frame, you can see it's also overbought. 4-hourly time frame, you can see it's also overbought. Daily time frame, you can see it's also overbought. So this is how I'm making my assessment. Obviously, this is technical analysis. There's no crystal ball. There is no definite 100% this is going to happen, but with a high degree of probability, the DXY looks like it's breaking down. Bitcoin's looks like it's breaking up. This is why I feel comfortable discussing upside targets. Another reason is if we go into our Bitcoin, well, we can look at two things. We can look at the total 2, okay, which is the amalgam of altcoins in the market and what they're doing, okay, and we can look at Bitcoin dominant. So let's look at both. Guys, don't forget to like the stream if you're here. I don't know who's here. I don't really track that, but if you are, definitely like the stream, especially if you're getting value. Like, share, and subscribe, all that good stuff. Okay, so we looked at the DXY. We can look at Bitcoin dominance and the total 2. Let's look at Bitcoin dominance first. Okay, so Bitcoin dominance on a high time frame, so on the daily time frame, is butting its head up against resistance, okay? And that resistance is the bottom of this channel that we were talking about that was breaking down, okay? So remember, every single time you break significant resistance or significant support, you always have to retest it, okay? So here, you break significant support, you're retesting it as resistance. That's to be expected. And that's what we have here, okay? So this is significant because this support level is a 2-week support level that you broke. So you're going to have to come and retest it, and this looks like we've retested it. Once that retest is over, then the trend, the initial trend that's been established, can continue, okay? So just looking at Bitcoin dominance, it gives us another clue as to what may be happening and what's likely to happen. Bitcoin dominance is breaking down, Bitcoin dominance looks like it's going down, then the entire cryptocurrency market looks like it can go up. Yeah? Remember, Bitcoin dominance has to go down for a full crypto rally. If Bitcoin dominance is going up, that is either a bear market rally or a declension, a bear market where crypto is going down completely. Either Bitcoin's going up and nothing else is, right? Things are going sideways, only Bitcoin is going up, or Bitcoin is going down and everything else is going down much more. That's when you have Bitcoin dominance going up. Okay, so we always, if you're bullish on crypto, you want Bitcoin dominance to go down, and that's what we're looking for using this as an indicator. The other thing we can look at is the total 2, okay? And so the total 2, like I said, is taking all the altcoins in crypto and putting them in one chart. And here, as I've shown for a while now, we have our inverse head and shoulders, bullish reversal pattern, breakout, and retest. So I want to point out this retest is exactly what you expect. A retest of a neckline where even though you break out, you come right back down to retest broken resistance as support. So that fundamental tenet is consistent. You break significant support, significant resistance, you're always going to have to retest it, and this is what happened. This is why we can expect a move up, because this move has completed the retest. This is the breakout, this is the retest. Now we can get the real breakout, okay? And now if we look at Bitcoin the total 2 chart, and we zoom out just a little bit, we can see that the target is not this right here, this neckline over here, okay, but actually up here, okay? The target is about 80% of the way up. Let's see, sorry, wrong tool. Here we go. Yeah, 83% of the way up. Now, why am I saying that the target's all the way up there? Okay, this is what I want to talk about today. So, one way of ascertaining that target is looking at this entire bullish consolidation pattern as a massive inverse head and shoulders or cup and handle, probably a cup and handle pattern, right? And taking the technical target of the largest wave or the largest sort of dip, and then superimposing that from the side of breakout. And that's one way to get this target up here, okay? Another way, and this is confluence, where 2 different methods converge and give you similar results, is looking at this drawdown right here, this declension, which seems like it's an A, B, C wave down, okay? And taking a Fibonacci retracement tool from the top of that move all the way down to the bottom, okay? And the orthodox low is about there, not down here, but there. Okay, I'm not going to really explain why that is, but what I want to draw your attention to is the fact that the 0.618 phi ratio is almost exactly, or actually exactly, the technical target of this bullish reversal pattern. Boom. So 2 things yield the same result. So if I'm trading altcoins, which I am, I'm putting an alarm right here, because once that gets hit by altcoins, as by this chart, right, which represents majority of the altcoins in cryptocurrency, that should be a valid and significant take profit. Now, why did I say I'm looking at upside targets? We haven't even broken out in most assets, right? only a few assets have broken out at this point in time. If you look, you can see something like DYDX has started to break out. But in our watch list, that's pretty much the only one that has really broken out. Like everything else has yet to do so, and it's still kind of at the bottom of its channel, okay? Things are clearly ready to break out, but they have yet to break out, okay? But DYDX is broken out. So I'm talking about upside targets because if you look at this example, and this does play out, okay? What happens after you hit that? More likely than not, you come right back down here. Not all the way back down here, but back down here. Why? Well, it's again the principle of retesting significant resistance as support. Okay? So if you look, this level of resistance is true, okay? And it's held the price action down for almost 500 days, okay? So given that the price for altcoins has been under this resistance, this line is what I'm referring to, for about 500 days, it's highly likely. Highly likely. There's no definite, there's no 100% in trading in analysis, but it's very likely that a break of this resistance would have to be retested. Okay, and so if we did break out from where we're at right now, okay, and that is where the impulse started, and we went all the way to our target, look at where the retest of resistance would be. Right at the 0786. If you don't know, the 786 is a common flat correction retracement. Okay, so that's a pretty steep retracement. That's 78.6% of the move. So if we do go up in 5, okay, we would come back down in 3 beyond the fire ratio. Okay, so you're giving up the majority of your profits if you do enter a trade here and it hits our target and you don't take profit. You're coming down a significant amount. This is why I think it's important to talk about upside targets, okay? And this is actually quite common. The first breakout of any major pattern does not yield perfect impulse, okay? I'm going to say that again. The first impulse of any, the first breakout of any major pattern does not yield pure impulse. In pure impulse, the retracement cannot come beyond the 0618. The steepest and most severe retracement of any pure impulse is 0618 because that's what you get in wave 2. Wave 4 typically retraces between 236 and 382 Fibonacci retracement level of wave 3. Okay? So you're not getting a wave 1, wave 2 situation. You're getting a breakout and retest, and that is all corrective. So it would behoove most traders to find out where that target is, take profit before this full moon retracement, which is most likely going to catch a lot of people unawares, okay? So on average, I can see altcoins going to this target, which is about 83% of where we're at now, okay? Now, specifically speaking, if you look at Bitcoin, what does that look like? Okay, a lot of people are interested in Bitcoin. Guys, if you're getting value, please like, share, and subscribe. So if you look at Bitcoin specifically, okay, on the daily time frame, let's say we do break out from here. Again, same scenario and same sort of reasoning. We have to retest staunch resistance as support, okay? And the staunch resistance in this case is this 40-day resistance right here, okay? So 40 days under this level. This is why I drew this trend line right here, because for 40 days, this level at around 31,000 has been keeping Bitcoin underneath it, the price of Bitcoin underneath it. So what's more likely than not to happen is that we break that $31,000 level. Okay, and now the question is, when we break, if and when we break that $31,000 level, where do we go to? Okay, so if you look at this piece of price action, or, price action, it looks kind of like an inverse head and shoulders, right? A bullish reversal pattern, okay? And so, as always, if this is indeed an inverse head and shoulders bullish reversal pattern, what you want to do is take the technical target by measuring the neck from the neckline to the lowest point, superimpose from the site of breakout, and that would give you almost exactly $40,000. So I would not be surprised if Bitcoin came to the $40,000 level, and at that level, then put in a full moon retracement in 3 waves down to the neckline. You have to retest this as support. You have to. You cannot be under 40 days. It is not just 40 days, because if you look at this entire thing as an inverse head and shoulders bullish reversal pattern, then you consider this resistance to have been more than 100 days. If something serves as resistance for more than 100 days, you cannot break it without then retesting it as support. Okay? So more likely than not, we can expect Bitcoin to go up to the 40K level, which should serve as resistance, and then come back down. Another reason we can say 40K is likely resistance: 1, it's psychological resistance. 2, if you look left at your price history, that 40K region is, let's see, let's use this rectangle tool. Where is it? It's somewhere here. Okay, maybe it's somewhere here. Ah, man. I hate how it's hard to find. Okay, here it is. Okay. That $40,000 level is right around this area. Okay? So it's in, so you can see here that price has respected, I'm now going back to my pen. This was resistance, this was resistance, a bit of resistance. You have a level of resistance here, historically speaking, if you look left. So it wouldn't surprise me that this would serve as a level of resistance. In addition, if you take your Fibonacci retracement tool, again, just like we did with the altcoins, from the top of this move all the way down to the bottom, yeah? And actually, we wouldn't go like that. We would take it down here because this is your orthodox low. I can explain that another time if somebody doesn't know, but this is basically how we measure things in Elliott wave theory. You don't just take any point, or the highest point or the lowest point. You try to measure your orthodox highs and lows to be accurate in your measurements. Okay? And what do you see? What do you see, guys? Once more, again, can't make this stuff up. Here's the confluence. Same confluence that we saw in the altcoin analysis. You have 5 waves down, okay? Or a flavor of 5, right? It's actually a double zigzag here. Yeah, some sort of double zigzag. In any case, you would have 40K represent the 0.618 Fibonacci retracement of this declension. So this drawdown, this bear market drawdown, is now going to be tested at the phi ratio. And we know that the phi ratio typically represents resistance when you're below it and support when you're above it. Okay? So that is my analysis, this is why my upside target for Bitcoin is 40K on this move, and that's just this move. So I can see us doing something like this: 1 2 3 4 5 1 2 3. Okay, that full moon declension is gonna take a lot of people by surprise, and you typically see this typically happens the first breakout in a long time. Everybody's so excited, the price goes up really fast, relatively high when it hasn't moved in a while. Everybody gets so excited and everybody wants to take profits. This is why you can expect a significant drawdown once we hit that target. Again, you're looking at a 786 retracement level, right? Something like that. All the way back down to 31K, the level that served previously as resistance for 100 or so days is now going to be flipped to support. So it's all it all makes sense, right? Why you would come down right back to those levels. Okay, so that's where I see Bitcoin going. That's why I see it going there. That's where I see altcoins going. That's why I see them going there. If you guys have any particular requests for any altcoins you want me to look at, let me know now. If not, I'm just going to use this example or this time to go through a few of my trades and where I think they're going, where I'm taking profit, why I'm taking profit. They're basically using the same principles that I just articulated for Bitcoin and the total too. Okay, so Arweave is going to be the first one, and I've kind of already mocked it up, okay, because I've already set my profit or set my take profits and all that stuff. But if you look at it, you're dealing with an asset that has created a 50-day resistance at this level. So this neckline is 50 days of resistance. I think that the move, the breakout, breaks this 50-day level of resistance again to the phi ratio thereabouts of the declension, and after that you come back in 3 waves and retest this neckline as support. Again, if you pull out your Fibonacci retracement level, you'll see that that pullback represents a 786 flat correction pullback, right? More or less a 786 flat correction pullback. And actually, I actually targeted, even because, look, this is not an inverse head and shoulders. One could say it's kind of a cup and handle, but I don't think so. I think it's more likely than not that Arweave go all the way to this resistance, because this is the next major resistance, so all the way up here, and then come back down, and that retest would be a 786 retest. So I've got my profits for Arweave up in the $11 range. Okay, so that would mean a 99% move. Okay, now we got Blur token. This is a little special. And how is it special? Because this is a new asset. It didn't have all of the price history that most of these other altcoins, it doesn't have all the price history that most of these other altcoins have, okay? So if you look at Blur token, you can see that this region right here that it's been in represents its 50 days of consolidation, okay? So the idea is we're going to likely break out of this 50-day consolidation channel, okay? And you can see we basically double bottomed this, and we're gonna probably create a W reversal pattern, break out, and when a channel breaks out, it typically breaks out the height of the channel. In addition, I can see us making a move up here, because once again, if you take your Fibonacci retracement tool from the top to the bottom of this move, you can see that the target pretty much lies at the phi ratio. Okay, so I'm targeting this area for Blur token. Okay, And so that would be a move of about 140%. Okay. And when do I expect all this? Probably within the next few days, because, it's going to be a strong move before the full moon drawdown. And the full moon drawdown has to happen, well, typically should happen within the next 4 days. Okay, so that is Blur token. Okay, Dodo. This is a little different, but again, the principles are the same. You observe the channel that the price has been in, and usually these are 50-day channels. You're likely going to break the channel, okay? And then the question is, where's the next significant resistance? Here in Dodo, the next significant resistance is this right here, okay? So if you hit that, then you would have to obviously be rejected from here and then put your 3 waves down. And if you measure this once again using your Fibonacci retracement tool, you can see that's a 786 retracement right there. So I can expect Dodo to come to about the 14.3 cent level. Okay. But again, same reasoning that we're using throughout. Okay. And DYDX is, I think, the most clear of the examples. One of the reasons for that is you see a very clear, nice and clean inverse head and shoulders here. Okay. And then you have a very nice and clean significant resistance. This is clearly significant resistance, that dotted line right there, because you can see that this entire structure is hundreds of days old. And so the top of this structure must serve as some level of resistance because you have so much price history for hundreds and hundreds of days. Okay, not only is that the next resistance, but this right here is the perfect target to the penny of this inverse head and shoulders. So for DYDX, it's almost a no-brainer, and it's already started breaking out. The take profit is over here, around the $3.67 range, and it's very clear that once you get that, it's more likely than not that you put in a retest, right? You have to break out. Remember, you look at this inverse head and shoulders, 50 days of consolidation. So that neckline is 50 days old. You don't just break out of it without retesting it, okay? So you break out and you're coming all the way back down to retest that resistance, that 50-day resistance as support. Again, if you take your Fibonacci retracement tool from the bottom of this move all the way to your purported target, you see that it's a 786 retrace. Do you see that? Can't make that up. You see that? You would come down 786. And again, in Elliott wave theory, a 786 retrace, that's a flat correction. And that's what you expect upon first breaking a significant resistance. Guys, if you've gotten value, please like, share, and subscribe. I don't look at other people's analysis much these days, but I used to, and I haven't seen any similar analysis. Doesn't mean I'm always right, but the depth of my analysis is uncommon. And for those of you who are serious about technical analysis, even in the depths of the bear market, this is the place to be. This is what interests me. And if you want to talk more about, this kind of stuff, definitely engage, comment, send me messages. This is what I geek out on. All right, so that's it for me. Hope you're well positioned to actually take some profit. Most people don't react until after the move, but as traders, we have to be prepared for what's likely happening, even though we don't know exactly when it's going to happen. I think this move is happening. Again, you can see some examples of it in certain assets, but the rest will follow with a high likelihood. Okay, take care, and I will see you maybe tomorrow.